Good morning traders and welcome to this Orbex Market Insights update for the miners and crosses on Thursday, August 15th, where we will be looking at the Aussie Kiwi dollar and the Aussie yen. So we've had a lot of movement in these two pairs recently, with some important developments in the fundamental backdrop which are worth discussing. So in terms of the Aussie Kiwi then, we've seen a large move higher recently in the wake of the RBNZ unexpectedly cutting rates by 0.5% at their last meeting. The move, which came only days after the RBA kept rates on hold, was above the expected 0.25% rate cut and caused a sharp jump higher in the Aussie Kiwi, which the market is still digesting today. Now, although the RBA chief later that week said that the RBA will likely have to cut rates again this year, for now the Aussie Kiwi is still trading higher, with NZD weakened by the rate cut. In terms of the Aussie yen environment then, price action has been a clear reflection of the deterioration in risk sentiment recently. Following the unexpected announcement of a fresh set of 10% trade tariffs due to hit a further $300 billion worth of Chinese goods starting from September 1st, along with the subsequent heavy devaluing of the Chinese yuan, risk markets have recoiled recently. Now, the uptick in trade tensions has weighed heavily on the Aussie, while the Japanese yen has been supported by an increase in safe haven inflows as equities come off. Indeed, although we saw a brief recovery in equities this week as the US unexpectedly announced that some of the goods due to fall under the new tariffs will be exempt until a later date, the move was short-lived and equities have come under pressure once again, sending the Japanese yen higher. Okay, so let's take a look at some technicals now then, and please remember, opinions shared here do not constitute investment advice, and when trading, losses can exceed profits. So kicking off with the Aussie Kiwi then on the daily chart, and you can see here clearly the scale of that move over the last week with the knee-jerk reaction higher in reaction to last week's RBNZ rate cut. So the Aussie Kiwi has reversed sharply off those 102.74 lows, and we traded all the way back above the bearish trend line from May highs, and the rally has so far been capped by resistance at the 105.47 level. Now, although some retracement is underway here, while we remain above that broken bearish trend line and above the 104.28 level, focus is on a continued push to the upside. So let's drop down onto the H4 charts now then. And you can see here the initial impulsiveness of that first move in reaction to the RBNZ rate cut. So we had this large bullish expansion candle here which broke above the 104.28 level and that bearish trend line from May highs. However, since then, momentum has waned a bit and you can see the move has been a bit more laboured, and as we traded up into that resistance level, you can see the RSI indicator was flagging some bearish divergence. So we could see some further retracement lower here in the short term. However, again, while we remain above that 104.28 level and the broken bearish trend line, focus is on a continued grind to the upside. Let's move across to the Aussie yen then now on the daily. Okay, and so you can see here then the extent of the heavy declines in the Aussie yen over this year, and particularly over the last week or so, with price breaking down below that 74.17 support level. We traded all the way down to just shy of testing the 2019 lows at the 70.43 level before reversing slightly higher. And again, although we did trade to the upside briefly this week in response to that unexpected US trade announcement, you can see that with equities coming back under pressure, the Japanese yen has found support once again and price is remaining heavy. So for now, the outlook remains bearish in the Aussie yen with further losses expected unless bulls can get back above this 74.17 level in the short term. However, for now, that looks unlikely. And if we drop down to the H4 charts, you can see here that price has been settling nicely into this range with the 71 level underpinning the low side and around the 72.70 level holding the upside. So for now, this is looking like a bear flag situation, which suggests that we are going to break to the downside. And once again, that 70.43 level is the key downside level to watch, and a break there will open up a rundown for much lower levels in the Aussie yen. Okay, so these are the levels I'm looking at then in the Aussie Kiwi and the Aussie Yen over today and the rest of the week. Please remember to stay tuned into the blog where we will update you each day on any important trading developments as they happen, doing our best as always to serve traders responsibly. Thanks a lot for joining me today and good luck with your trading. Goodbye.